As long as the world doesn't collapse in a heap, then it looks as if it can go to higher places from here.
So Kevin, some are saying that Vietnam is at its key point in development. So how would you describe the Vietnamese equity markets at present?
Well, I think at the moment we're waiting for a significant move in terms of the opening of the market through the removal or relaxation of foreign ownership limits. And the biggest listed company has just literally today announced that it's completed the internal formalities in order to progress that. So I think once that happens, as long as the rest of the world isn't in a less than calamitous space, then I think Vietnam still has plenty of upside from here.
And how would you describe the latest performances in the equity markets in Vietnam?
Well, over the period of the last few days with Brexit and so on, obviously there was an immediate initial reaction last Friday morning. But subsequent to that, Vietnam has proved itself, or at least the equity market has been very resilient. It looks like it's holding its support levels, and I think, as I say, as long as the world doesn't collapse in a heap, then it looks as if it can go to higher places from here.
Completely, and we have the graph behind us here, and it looks like a very consistent uptrend. So would you say that Vietnamese equity markets are almost a safe haven at present?
I don't think you could ever describe frontier markets as a safe haven, but given the relative risk profiles of it, Vietnam, from a macro perspective, is in a very good place. I mean, its economy is in probably the best shape it's ever been in. Certainly, the rest of the world would, be very happy with 5.5% to 6% GDP growth and inflation at 2% or so. And as the economy develops, as Vietnam moves up the value chain from producing garments and footwear to producing electronics, then obviously the economy is able to expand, and that background allows the equity market to perform whenever or at such times that people's risk appetite increases. Well, as I say, I mean, the big theme is the relaxation of foreign ownership limits. The biggest listed stock is hopefully about to do that within the next month. And I think that will, in turn, provide impetus for the rest of the market and certainly encouragement for other companies to do the same thing. There are ETFs, but they are very definitely not the way to play this, because they can't own the stocks which are at the foreign ownership limit, so they won't benefit from the removal. In fact, there'll be a cause of the upward move, I think, in terms of the stocks at the limit. So it's either going direct, and that would involve obviously opening a trading account and finding a broker who has research which you're happy with reading, but otherwise there are a number of funds, whether open-ended or closed-ended. We manage open-ended funds. There are some closed-end funds listed, particularly on the London Stock Exchange. But I think to get the best broad perspective, the best exposure to the market, I think a fund is better than immediately trying to figure out which is the best stock to buy, particularly if it's one of those at the foreign ownership limit, which tend to be obviously the higher quality stocks.
Well, Kevin, thank you so much for coming in today and sharing your insights with us.
My pleasure.
That's all from myself and Kevin, but if you did like this interview, do like and comment on Dukascopy.tv.